I'll start this talk by giving you a brief introduction to Investinor. We have one office, and that's right here in this town. About 20 people working here. We manage 4.2 billion in Norwegian currency, and we are now the largest venture capital investor in Norway in terms of capital invested per half year, and also the staff size. These are the companies that we have invested in since we entered the market in 2009. As you can see, we are quite diversified. We have fish farming, we have oil tech, we have ICT, we have biotech, nearly everything. And we're spread out all over the country. Okay then, I'd like to ask you in the crowd here, do you know what venture capital is? Those who know, please raise your hand. Okay. Those who did not raise your hand, don't feel embarrassed, because most people don't know anything about venture capital. And even those who think they know are actually often quite ignorant. So I'm going to give you a brief introduction. These brands and companies were created with venture capital. Some investors, the venture capitalists, invested in these companies when they were young and unknown, but promising. And they fueled them with capital and mentoring and helped them become great and world-leading. That's venture capital. Now I have to look at my manuscript, if you will excuse me. Yeah, okay. Venture capital as a term and as an industry came out of Silicon Valley alongside with the ICT industry. And today, in most, if not all, industrialized countries, venture capital is regarded as an important precondition for innovation and growth. This figure right here is supposed to show you how a successful startup company develops. Mind you, I said successful startup company. Most companies will not develop like this. But if you are successful, you will register your company here in Norway in Brønnøysundregisteret. Then you will burn cash while you develop your business model or products. You start selling, and up here you start making money, and the profit will grow and flatten out. And we have these names for these stages. You will notice when you discuss venture capital and investments, people use different names on the same stages, and vice versa. So it would be very fruitful if we could agree on using these terms right here. Actually, they come from the European Venture Capital Association. Do you know any venture capital firms here in Trondheim? Yeah? Name a few. Viking Venture, yeah. Any others? Pro Venture, yeah. Two very good firms right here in town. There is a common misunderstanding out there that venture capitalists, also known as VCs, are cool guys with deep pockets, and their only mission in life is to hand out money to the wannabe entrepreneurs and good ideas. And unfortunately, the truth is a bit more complicated than that. Actually, the purpose of venture capital firms is to create returns on the money they invest. And only a small fraction of the money that VCs invest come from their own pockets or bank accounts. The larger part of the capital that they invest in early stage companies come from other investors. or capital owners who have outsourced the management of their money to the venture capital firms. And in order to achieve the returns that these capital owners expect, venture capital firms have to be very selective or picky, if you want, when they choose their investments. As a rule of thumb, venture capitalists will invest in 1% of their deal flow. In other words, they will look into 100 companies and invest in just one of them. Venture capital is looking for what I like to refer to as the Champions League of early stage companies. If you ever get the privilege to start such a company, you may experience that something rare. Reputable venture capital firms will be running over each other to invest in your company. That's when you are in the Champions League. But for most startups, this will be just a dream. Most startups are not in Champions League. They may be in Premier League, or in Tippeligaen, or in Adeccoligaen. I'm sorry about the football metaphors, but I think you get my point. Among the 99% of the early stage companies that are not in Champions League, there is most likely a lot of great potential. But still, they will probably never be funded by venture capital. Their option is to look for other sources of funding. Now let's look at the overall access to venture capital in Norway. This figure shows how much capital that has been invested in Norway since the financial crisis. As you can see, this line here tracks the amount invested every 6 months, and it has dropped remarkably. On this line, the blue line here shows you overall investments in Norway, and as you can see, the economy is growing steadily, but venture capital investments are still falling. And the other line here, the dotted line, shows you what the market would be like without Investinor. Somewhere between 30 to 40% of the venture capital invested in Norway last year came from Investinor. And that's a pretty large portion. It's too large in our opinion. And like I said, only 1% of the startups looking for venture capital actually get funded. This is the normal situation in all markets, even in Silicon Valley. So from the starting point, access to venture capital is limited. It always was, it is, and it will be. But now then, in addition, just to add to the misery, the total amount of capital invested in Norway is shrinking. So if you are an entrepreneur here in Trondheim or Brønnøysund or Oslo, and you're not in the Champions League of startups, where can you go to get the funding you need? In some markets, especially in America, business angels is a good option. Do you know what a business angel is? Yeah, I see some hands here. Well, business angels are individual investors that invest their own money from their own pockets. And then they offer their network and their experience as mentors for entrepreneurs. While venture capital firms usually look for large investments, and by the way, they have to because they manage large funds, business angels are usually more willing to invest smaller amounts in smaller companies. So, business angels, they're a good option for many startups. But Norwegian business angels are not like the Americans. First of all, they can be hard to find. Anybody here knows a business angel? Yeah? See some hands, good. But most business angels in Norway, there are not too many of them, and they're quite invisible. You can't find them on the internet. And if you go, like I do all the time, to the typical matchmaking events in Norway where startups are supposed to be meeting investors, you won't find many business angels there either, surprisingly. But if you do find them, business angels can be a great asset for your startup company, providing the capital and value-adding ownership that you need to grow your business. Another option is government funding, of course. Here you see some of the ecosystem that we have here in Norway. I don't think I have the time to guide you through all these, but I can say that government support comes in many shapes and forms: incubators, mentoring, grants, loans, and more. And my overall advice to startups is you have to realize that government funding is not necessarily free money. You have to work for it, work hard for it. And then there is this new phenomenon, crowdfunding. This is still in its early beginning, at least here in Norway, so I think it's a bit early to conclude on whatever effect it may have, but it certainly deserves a chance, I think. Finally, I would like to recommend our website. For those of you looking for funding to your startup company, we have published a list here over all the early stage investors, angel networks, incubators, co-working spaces, and government support programs that we know of here in Norway. So please help us keep this list updated and complete. Send us an email if you find any mistakes or mishaps here. And here's the address of the website. Thank you.